Our next session focuses on the evolution of digital assets in banking, a space being reshaped by cloud, AI, and emerging technologies. To share insights on this topic, we have with us a seasoned technology leader with over 25 years of experience driving large scale digital transformation. He brings deep expertise across cloud native platforms, AI, ML, and blockchain, and is known for building high performing teams and leading complex enterprise programs. Please join me in welcoming Mr. Ravi Kapagantu, who is the Head of Architecture and Innovation at Lloyd's Technology Center. Audience, we promise we have tea break after this. Awesome.
Good afternoon, everyone. And so I have no pressure, like I'm between you and a tea break, right? So I'm going to talk today about a topic that is very different from what you have been hearing, right, like since morning. It is not AI for a change. Okay, it is a technology completely complementing AI, and right, like we are in the crossroads between like AI and what I call as like digital assets or blockchain or DLT, like whatever name that like we call it with, right? So I will take you through a little bit of history of digital assets. Okay, good. Yeah. Again, like I will not bore you with like a lot of slides. Maybe like we'll just stick to this slide. Okay. So again, like a little bit of history, right? So blockchain is not a new technology. Blockchain is something that started way back in 1991. So the origin of blockchain is with a paper that spoke about cryptographic timestamps. So essentially, like the whole idea is you heard like you have seen an example that AI is being used now on that, like how do you identify forgery, right? So this was actually brought in. This innovation was brought in to prevent forgery and essentially right, like make your documents immutable or forgery proof, right? So from then onwards, like the technology took a lot of different shapes, and the shape that we know as of today happened, right, like or the origin of that happened in 2008. So 2008, right, like I think many of you around this room know the financial meltdown. When the financial meltdown happened, one of the things that several people looked at is what are the alternatives to what we call as traditional banks. Because it like almost like a lot of banks had like bailout issues, lot of banks like they actually like collapsed and the system was like in the verge of collapsing, right? So Bitcoin, right, that is based on this blockchain technology, started in 2009. So that was the origin of Bitcoin that right, like we today look at as the base or right, like the starting point of all the cryptocurrencies. So from 2008, January 2009 was the first time right, like the first Bitcoin was mined, or right, like what they call as the Genesis block of Bitcoin was mined. So from there, it right, like was very slow. It right, like was going right, like the undercurrents were there. 2013, around 2013 to 2014 was right, like Bitcoin got into 10,000 plus dollars range per Bitcoin, and that is when it became from right, like what was noise to something that right, like people started noticing, right? And like it is around the same time, right, like 2014 and like 2015 is where right, like people said, okay, we need, there are like other ways we can start using this blockchain technology. And projects like R3 Coda and Ethereum have started. And 2015 is when the first smart contract or the permission-based smart contract was started, right? So that is like Ethereum, right? And that opened, right? Like that actually changed the perception of like what digital ledger is, or like what Bitcoin-based technology is. From like, okay, it is only a cryptocurrency that like people in parallel world use, to a technology that we can start using in enterprises, right? So from there are like several organizations started investing in and started doing proof of concepts. So first of like those companies was JP Morgan Chase. Around 2016, JP Morgan Chase started Interbank Information Network, or IIN. So essentially, right, like for doing trade finance via Ethereum based like smart contracts, where they started moving billions of dollars, right, like via blockchain on chain, right? Then there were like consortiums, right, like between like 2015 to 2020, there were several consortiums, right, like that formed. One is right, like B3I, mainly for insurance purposes, right? Second is Marco Polo, mainly for right, like trade finance across companies, and F-finality or penalty, right, like the way it is called, for tokenized asset or like tokenized settlements, right, for cash settlements. So again, there are several consortiums, so that is like between 2015 to 2020. And around 2018 is the time first digital currency that is backed by government or federal currency came into picture. 2018 is the time, first time US dollar was digitized. So USDC came into picture in 2018. So then like there were, so with that, there were like several new opportunities that opened. Like, so people also looked at the benefits and the strengths of tokenizing assets. So not just currencies, but like other assets. So the assets, again, right, like there are companies, right, like several European companies that started tokenizing diamonds, right, like real estate, and right, like what people call as RWAs, so real world assets that are tokenized. So there is like a lot of transformation that has happened, right? So why is it, and like again, I think last year with US government announcing Genius Act, right, where they made it like USDCs regulated. So that actually opened up a lot of cross-border payments, transfers, cross-border transfers happening via digital assets. So that opened it like a completely different opportunity for banking, right? So why is it all right, like important now? And again, right, like we have been hearing about it, like AI, right, like what AI brings in, right? So I think that like why it is becoming important now is with all things right, like that you heard AI. One thing that like that is challenging for AI is trust, and one thing that is challenging for blockchain or trust is essentially like the strength of blockchain, but like what blockchain needs or the blockchain transactions need is intelligence, right? So I think that like we are at the right cross junction between AI and digital assets like at this point. And like again at Lloyds, we are looking at like several opportunities. So we are looking at like a combination of document processing plus uh, plus document processing using AI plus like blockchain to get into something like digital wills. So essentially where like you can digitize your entire will using a combination of document processing or like even document generation, legal document generation that you can do in using AI, and then right like you can make it immutable and legal via blockchain guardrails or DLT guardrails. So similarly, right, like there are asset tokenizations, right, like that we are talking about, where you can tokenize money market funds and essentially bring a lot of collateral back into the money market, right? And we are also looking at it, like how do we change the entire like payment system using essentially the cross-border payment system using digital assets. And again, right, like that, in the back end, uses blockchain, but like in the front end, it uses AI, right? So, and agentic commerce, right? Like that is another thing that is coming with Visa and MasterCard and like several other banks and like merchants. So again, the guardrails right, like for that and the trust right, like for that is essentially provided by something like CBDCs or stable coins, right? So again, there are like several cases that are emerging that are using right, like both these novel technologies and essentially right, like so in today's session, like I wanted to bring the evolution that is happening that makes digital assets so much right, like lucrative and right, like knowing this technology and using this technology in conjunction with AI right, like a lot more fruitful right, like for the companies. Thank you.